Hello everybody and welcome to Hawkeye FX with your host Marcus Dooms on the 15th of June 2017. In this video I want to take a quick look at the Bank of England interest rate decision today, and we can see here on the screen that 2 additional people voted for a rate hike, and this told the market that the next move would be an interest rate hike rather than a cut. On that news here you can see that the pound jumped straight away, and in the pound US dollar this was over 100 pips. What I'd just like to show you in this video is the price structure that we see in the forex market and which we use in the Tomahawk trading system. So for this market structure, we're looking to isolate a low in the market, a first run up, and then a pullback or a retracement to 50% of that first run. Now then, as the price comes up and breaks the previous high so that we get a higher high, already having had a higher low, we enter the trade at the 100. And then we're looking to take profit at the 161 level, or secondly at the 261 level. So today's news example was a perfect example of this in action. You can see on all of these 6 pairs we had that same process happening. We isolated the low, the high, the pullback to the 50, exactly the 50 there, and a break of the 100 to enter us into the trade and hit the second profit target. See here on the pound Aussie, the run up, the pullback to the 50, breaking the 100, hitting the profit target. The pound New Zealand, first run up, pull back to the 50 here, breaking the 100 and hitting the second profit target. The euro pound, a high, the first run, the retracement to the 50 line, and then breaking the 100 to enter the trade, taking profit at the second profit target. The US pound was slightly different. This is the isolated low, the first run up. This one came down and made a double bottom, as we can see here, before coming up, breaking the 100 and hitting the first, second, and in this case the third profit target. The pound yen, we isolated the low, the first run up. This one also came down and made a double bottom. In fact, it was a triple bottom before breaking and entering the trade here and hitting the second profit target. Now, if you wanted to actually trade this through a news announcement, you would have to put a buy stop at the 100 level there. So when the news came in, it would instantaneously take you into the trade as it broke the 100, and you would put your take profit at the 261 level here, and you would be in and out making 50 pips in about a millisecond. However, in reality, the brokers watch out for it. They open their spreads during these big news announcements, and also because this happens so quickly, there will be some slippage in the price. In the most likely scenario, you'll be entered here. The ask price will be up here somewhere. When the bid price passes through the ask price, you'll start to enter into some profit and you'll get taken out for your take profit here. So in reality, maybe a third or a quarter of this would be taken as profit. Okay, I hope this little insight helps you with your trading, and if you'd like to find out more, then please do join me in the Hawkeye Tomahawk room.